Yes, sir.
Hungary saying that they face a similar position to Greece. Not quite as bad at this stage, but that really seeming to send a shock through the markets.
Well, I think the problem is that the market is thinking, well, who else has this thing? Hungary itself is not a big part of Europe, so its reverberations, aren't going to be as far-reaching as had this been Spain.
Because it's not even part of the Eurozone.
It's not even part of the Eurozone, but the problem is that, if one neighbor has a repossession of his car because, times are good, interest rates are low, then you have to wonder about other neighbors. At some point, more people have to put their hands up, and I think that's really what the market is worried about.
And of course, we do know that banks in the region will have exposure to Hungarian debt, so if there is a possible default in Hungary, it is going to be felt by the banking sector.
Right, it's going to affect more countries and more banks across the globe, actually.
It does have a deficit 1.5 times that of Greece, so far greater. Apart from that, many officials are now saying, why come out and say something so negative that would affect global markets? And many say that there are a lot of political agendas, and we also have to keep in mind that many countries are trying to weaken their currency as well. Do you think that perhaps there was a different kind of strategy?
Well, no. I mean, the new fella out in Britain, what's his name again, David Cameron, he also said on Friday that Britain is in a much tougher space than Gordon Brown had told the British public that it is in. So the same is true in Hungary. The new party has come out and said, I've just taken over. The previous guy lied to you. He said public finances were in a much better shape than they are, and it's my duty to tell you that they're not, that they're worse. So he's just setting the baseline for how he's going to be charged, or it's going to be reviewed going forward. So you can't blame the guy for saying that. Question is, incumbent governments elsewhere in Europe, why don't they also come out and say, actually, we've been giving you a political line that things are better. Things are actually worse, guys. It's just that they don't want to be voted out.
And this is exactly what happened in Hungary as well, because the current, the new political regime is saying that the previous government was lying. And I mean, exactly what happened in Greece. But at the end of the day, I mean, looking at the Greek government, when it wanted to come into effect and it wanted to be part of the Greek community, it did say that salaries would be increased, you'll get bigger bonuses, and they've done exactly the opposite. So I think, when you look at politicians, they do have to say some kind of lie so that they can win the election.
Right.
Of course, Hungary does have the luxury of having its own currency, so that currency can weaken. That can help Hungary going forward, which Greece didn't have because it is part of the European currency.
Right. I mean, look, it could help Hungary only if industry is able to put itself together to export stuff. But the problem is, if government finances are terrible, and teachers can't get paid, and workers in state factories can't get paid, then nothing gets done. So you don't export anything. And really no one benefits from this, regardless of how much weaken your currency. I think politically it just helps the new guy, but it really doesn't do much for the world.
All right, Hlelo, just looking at the, what is defined as being in correction territory, and the US is apparently officially in correction territory because it actually means that if you're down more than 10% from the most recent high, and the Dow officially below that key 10,000 level once again, official correction territory, do you think we could go down even further?
I can never tell you where we'll go, but I was listening to an interview of the vice president, whatever they call him in the United States, being interviewed by Charlie Rose, and Charlie Rose was saying to him, so when are we going to improve? When is the economy going to get better? And he said, well, we actually don't know. He said, when will unemployment actually ease? He said, we don't know because we're looking at Europe. There is no way that the United States gets better if the rest of the world isn't getting better. So, can they get worse in the United States? It sure can. If Europe doesn't help to suck up the exports from the United States, and the U.S. economy doesn't consume as much, it can get worse.
Of course, we had that jobs number on Friday, very disappointing because the private sector created very few jobs during the month. We did have, of course, the census hiring, which helped boost the overall number. I mean, they say employment is a lagging indicator, that it does lag growth in the economy, but how far is it going to lag? Because we're not seeing much of a recovery at all.
Well, this economy unemployment rather, was sort of stabilized by all sorts of stimuli factors, right? And those are coming out of the system ever so gently. But the real engine of the economy is, number one, credit for consumption and investment by the private sector. Now, that isn't happening. In fact, what banks are doing is they're buying U.S. treasuries because they got a better yield there, instead of taking risk on lending to to consumers and to the private sector. So until that happens, the multiplier effect that you expect to see credit having on the economy isn't going to take place. So jobs will continue to disappoint until the economy gains traction from the private sector.
Looking at the likes of Europe and of course unemployment in the US still being under pressure, everyone's turning to Asia, turning to where the money is, and of course a big focus on China. How do you see the global recovery playing out, Hlelo? Because there is a lot of talk about a double dip recession. I mean, even Chinese government officials are talking about a possibility of a double dip.
I think the Chinese are exhausted. They've done a fantastic job of holding up the global economy in the meantime. I mean, China is single-handedly responsible for pushing up commodity stocks and pushing up commodity prices. But they have to worry about inflation on their side too. They have to worry about, the massive amounts of consumption that's taking place domestically, what that's going to have, what impact that's going to have on their own inflation numbers. So property, for instance, investment in property by locals. What credit extension? They're just exhausted. They're, at some point you can't really throw money at a problem. You have to fix it structurally so that future growth takes a better trajectory than it has in the past. So I think China is going to continue to disappoint. The PMI numbers are not going to be as great as they were a couple months ago, and I think analysts will start dropping their numbers lower than what they had been expecting in the past, giving the numbers a chance maybe to surprise on the upside. But they're going to have to really bring it down low.
How about some of the other fast-growing Asian economies, such as India? Because we saw those growth figures out of India a couple of weeks ago, and they're growing pretty strongly. Will they be picking up some of the slack, do you think?
Well, India is an interesting country because it's a service economy. They don't really do much exports there. It's not like China. They don't buy iron ore and buy copper and then, do some fancy stuff with it and then ship it out, right? So these guys are IT driven. They sit behind a desk, write some formulas, and then put it on the internet and put it on Google. They do outsourcing, call centers and whatnot. That can't do it. That can't do it.
But there's a lot of internal consumption there as well, because remember, infrastructure is a big focus in India right now, and a lot of people need to be housed.
Well, but it's mostly for internal consumption. It's not sharing it on a global trade scale.